Why like that?
Our tips? Touch it. Tip me. Come on. Touch it. That's so good. Can you explain more about the 10-year Treasury yield? What does that mean? I think we got that on the earlier question. Assumable mortgages, and if getting the remaining balance in a second loan is common.
I saw this. It's a good question.
Well,
because I don't think people realize that, given the current state of the economy, banks, don't fight it. Not all banks are going to be so welcoming to take on an assumption.
Yeah, banks don't want you to assume the loan because keep in mind if they made the loan in the last, call it, 5 years, your loans are going to be under market rates, and they don't want to let you assume them. So generally speaking, I am not a fan of anybody who sells courses on this or teaches people to do this. And generally speaking, single-family residence loans are non-assumable loans. Only commercial real estate loans are assumable, and that's usually with a 1% down payment, and then it's then subject to the then in place underwriting standards of the bank, which will be uncharacteristically high going into this particular landscape. So
1% fee, I think you said 1% down payment.
1% fee, yeah, sorry. And then, of course, you have to come in with the money to make your same down payment and assume the loan. So if somebody gets a loan and they pay down the principal and interest, taxes and insurance over time, and now that loan is less, you can only get the current balance of the loan as your loan on the property, which means you have to come in cash in for the rest of it. So that's a lot of cash to put down. So a lot of challenges here. Getting the remaining balance in a second loan is common. No, it's not, because here's why. Generally speaking, single-family residence, traditional first trust deed mortgages on homes are non-assumable. They won't allow you to assume them. Commercial real estate is assumable. However, a technical event of default is a second trust deed on commercial real estate. And despite what many real estate agents and lenders will tell you, the bank won't call you in material default if you do these things like transfer title. A lot of guys on social media say that. It's a technical event of default. They will call you out in commercial real estate because many of those loans are securitized, sold onto the secondary market, and it has significant impacts for the risk profile of the loan, and they're sold off to a special servicer who is very anal retentive. Don't worry about the nuance of what I just said. Just know it's not going to happen.
Yeah. Basically, all that means when you get a loan, a technical event of default, there's a bunch of shit that you can't do when you get a loan with them. And one of those things is you can't get a second loan behind your first one.
And you would promise that in your contract of your loan documents in writing.